Welcome to my YouTube channel. Today we're going to talk about P60 end of year certificate. Okay, we need to understand what is P60. Okay, how to read it. Okay, and to check if you are due for a tax refund. Okay, so basically what exactly is P60? Okay, so P60 is an official end of year tax summary. Okay, it covers your earning and tax deductions from 6 April to 5 April. Okay, so you'll only receive it if you are employed on 5 April. Okay, if not, if you're not employed in that particular period, then you'll get another form that is P45. So that one I'll explain in another video. So for today, let's just focus on P60. Okay, so how important is this document? Number one, it's very essential for mortgage, okay, or even visa application, okay, and also checking if you're overpaid or underpaid tax, okay. So let's see what it entails, okay. So if you see my screen, this form will indicate employer information. Number two, your own details will appear there, like your name, okay, and national insurance number, which is here. Okay. Number three, a tax code. Okay. Tax code, which is here, final tax code, which is 1257L or BR. BR is base rate, which in this particular case will be at 20%. We'll go into details how to compute it, whether there is a tax that is due, okay, or if they owe us, if we owe tax or we need to be paid or refunded. Another field that is there's a gross pay, okay, so that is total earning in that particular employment, okay, period. Then again, there's tax paid, this one here, okay. So a tax code, this tax codes here, what is this 1257L? Okay, to make it easier for you to understand, a tax code will basically tells HMRC how much your income is tax free. Okay, so for example, 1257L, it basically means you get 12,570 tax free. So you just need to add a zero here. Okay, 1257 add a zero, that comes to 12,570. So that is a tax free. Okay, well, a BR is a base rate, which is you pay at 20%. Okay, so let's dive in, see the practical, how we arrived at this figure, whether the computation is right or wrong. Okay, so based on this, we see this employer here, the amount here is 18,332. Okay, so let's take this amount. Okay, this is the total earning. This amount is 18,332, okay, 0.50. Okay, so we less the personal allowance, which is 12,570, okay, which comes to 5,762.50. So this is basically what you're going to subject to 20% tax. Okay, so multiply this by 20%. So what's the figure? The figure is coming to 1,152.50. So if you check here, what the deduction tax that was deducted, or rather submitted to HMRC, was 1,150.60. So let's see, on our side is showing 1152.50. This other side is 1150. So let's see the difference. 1150.60. So there's a small variance of 1.9. Okay, so it's a minimal. It shows that we owe HMRC 1.9. Okay, so it's a minimal amount, but if the figure is substantial, then we need to pay. Okay, if actually that amount that was submitted is more, then we'll get a refund. I've covered the refund process in another video. Just check out my YouTube channel, then you'll be able to see that. So I believe this is clear how we go about it, and I'm hoping that it is helpful. So please like, subscribe, and share. Thank you so much for watching.